Hello and welcome to Vitsik here. In the next few videos, we are going to learn practical application of the concepts learned so far on money matters. So our video of the day is on how to make rupees 5,000 a month through investments in equity. We all dream of having some additional money coming our way every month somehow. So let's learn the trick to make it happen. The stock market instruments we will consider for the video are stocks and mutual funds. Without further delay, let's begin. Earning rupees 5,000 per month through investments is a reasonable goal, but the feasibility depends on several factors. Number one, initial investment. The amount you can initially invest. Number two is risk tolerance. That is your comfort level with market fluctuations. Number three, time horizon. How long you plan to invest. Next is market conditions, the overall performance of the market. Making rupees 5,000 a month through investments in the stock market and mutual funds involves several steps and requires a clear understanding of investment principles, expected returns, and risk management. Here's a detailed breakdown with example calculations. Number one, determine the annual income needed. To get rupees 5,000 per month, you need rupees 60,000 per year. That is 5,000 into 12. Number two, estimate the expected annual return. Stock market. Historical average returns from stock market can range from 10 to 15% annually. Mutual funds. Equity mutual funds can offer similar returns to stock markets around 10 to 15%, while debt mutual funds might offer 6% to 8%. For conservative calculations, let's assume an average return of 12% per year. Number three, calculate the required investment. To find out the required investment to achieve an annual return of rupees 60,000, use this formula. Required investment is equal to annual income needed divided by expected annual return. When you plug in the numbers, you get required investment is equal to 60,000 divided by 12%, which is 5 lakhs. Number four, now comes the investment strategy. First is diversification. Split the investment between stocks and mutual funds to diversify and manage risk. Next is rebalancing. Regularly rebalance the portfolio to maintain the desired asset allocation. Let's understand this using an example of portfolio allocation. Let's assume you want to split your rupees 5 lakhs investment equally between stocks and mutual funds. Number one, stocks. Investment rupees 2.5 lakhs. Expected return 12%. Annual income 2.5 lakhs divided by 12%, that is 30,000. Mutual funds. Investment rupees 2.5 lakhs. Expected returns 12%. Annual income 2.5 lakhs divided by 12%, that is 30,000. Now monthly income calculation can be done by combining both the investments. Total annual income is equal to 30,000 of the stocks and 30,000 rupees of mutual funds, which is equal to 60,000 rupees. Now the monthly income is 60,000 divided by 12, which is equal to rupees 5,000. Let's see this in a practical example. Suppose you decide to invest in stocks, rupees 2.5 lakhs, in a diversified portfolio of blue chip companies, and equity mutual funds, rupees 2.5 lakh, in a couple of well-performing equity mutual funds. Going by the assumed returns, you should be able to earn a monthly income of rupees 5,000. Now the risks and considerations. Market volatility. Stocks and mutual fund returns are subject to market fluctuations. Returns may vary from year to year. Number 2, investment horizon. Longer investment horizons generally reduce the risk and improve the likelihood of achieving expected returns. Number 3, regular monitoring. Periodically review and adjust your portfolio to stay on track with your financial goals. Number 4, fees and taxes. Account for transaction fees, management fees, and taxes which can affect net returns. Here are some additional tips. Start early. The power of compounding can work wonders over time. Automate investments. Set up SIPs or systematic investment plan for regular investing. Reinvest dividends. Let your earnings grow by reinvesting dividends. Stay informed. Keep yourself updated about market trends and economic conditions. By monitoring your investments and staying updated with market conditions, you can aim to achieve your goal of rupees 5,000 per month. Regular rebalancing and adjustments based on performance will be crucial to maintaining this income stream. Now, this is one of the many ways of earning rupees 5,000 monthly income. In the coming videos, we will discuss many more strategies of earning money through investments via different stock market instruments. I hope you found this video informative, and if you did so, do give it a thumbs up and share it with your family and friends. And do subscribe to our channel with Sikhya if you already have not done so. Thank you for watching. See you in the next video. Till then, happy and safe investing.